Inflation, it continues to moderate. The latest Consumer Price Index report shows prices in July were up 0.2% from the previous month, just in line with June's 0.2% monthly increase. And in headline inflation, you saw that rise by about 3.2% over last year, a slight acceleration from June's 3% annual increase. For more on inflation, we're joined by Keith Lerner, Truist Chief Market Strategist, joining us here live in living color in studio. Keith, great to have you here with us.
Great to be back with you in studio.
Absolutely. All right. So we've seen you walk in the halls here at Yahoo Finance this morning. You've had time to digest the report as well. Your headline thought when you took a look at this report?
Yeah, I think the report was fine. The market sold off for the last couple of days, and I think we're seeing a positive reaction because it wasn't, a negative surprise. I actually thought the report could be somewhat asymmetric, meaning I think if we had an upside surprise, I thought that could lead to more downside. I think the market's having a little bit of a relief that, it's fine. It's as far as in line with numbers. I still think inflation is still not, done. It's still something that the Fed has to watch. The core is still, the four handle is still relatively high, but trends have moderated a lot from where we were a year ago.
Is this enough of a relief to sort of put a bit of a floor under the recent declines that we have had?
For maybe today, listen, I think we're in a chop, and I think we're in a chop for some time. If you think about this market this year, this first half, we came in this year with very low expectations, right? Everyone was negative, and we exceeded expectations from the economy, earnings, and inflation as well. So as we move into this, deeper into the second half, the bar for positive surprises is somewhat higher. So I think we're going to see a lot of back and forth, some backing and fill-in, and just allow some of the fundamentals to catch up with these, really strong gains that we've seen, which is natural, right? It's normally 2 steps forward, 1 step back, and we think that consolidation continues.
I mean, when we think about the areas where there were still the largest contributors to the increases here, 90% of the increase still shelter, and then motor vehicles as well, also contributing there. And so, what do you believe the Fed is going to be looking into in terms of those two aspects of where inflation is still increasing or running hot?
Yeah, so we all know that the rent is overstated in these numbers, and those are going to cool. But I will say, so that's something they're going to look at as well. They're going to look at food prices and also just obviously the core. But there are some other things to watch as far as you're starting to see durable goods or starting to kind of bottom out a little bit. I mean, probably services are going to look at see as services continue to cool. And then wages, right? Wages are still running above 4%. So if you look at the Fed funds futures, the market's saying this is done as far as, or 70% chance of the Fed being done. And we probably think it's closer to 50-50. And we have a lot of data at this point. And yeah, at the same time, for Chairman Powell, there's no reason for him to talk softer on inflation until it's done. So we just have, we have several more reports in between the next meeting. But I think right now the market kind of takes this in stride, today's number.
What would be necessary for stocks to lift off again? Would it be confirmation that the Fed is done or something else, some other catalyst, given, as you said, that we've seen a lot get baked in already?
It's a great question because earnings are actually doing pretty well, right? I mean, earnings actually have started on a forward earning estimates have started to move back up. So I think a continuation of that, but we're moving past the earnings season. So listen, maybe there's something from left field that I was talking about. Maybe something as far as Ukraine. There's some positive developments there. But I really think we're more in the camp that it's just going to be, back and forth, waiting for another catalyst. You're moving into August and September. That historically, that's a choppy period. The market right now, the good news is, earnings have continued to come up. We've had a mild pullback, so valuations have reset a little bit, not cheap. But it's hard to say beyond, just investors who missed out jumping in, hey, what's the catalyst for a big move up from here? We think that 4,600 level near term for the S&P is going to be somewhat formidable, at least short term.
So now I'm going to ask the flip side of that question. What's keeping you up at night? What's the biggest risk to the market right now, particularly one that maybe people aren't seeing?
Yeah, I mean, I sleep pretty well, except last night in a hotel room. But I think right now we have more good news that's been priced into the market. So let's just say we had a nice, a decent inflation print today. If we start to see that move up, I think the market's not prepared for that. And let's say the Fed has to go another quarter point or another, 2 hikes. I think that's something that would be unexpected. And you're also, with the market where the valuations are, you're somewhat vulnerable to bad news. Now, sometimes we just don't know what that news is. What the headline is tomorrow that shakes the market up is often a surprise. So I just think, maybe one point there I would bring up is just, the economy, right? I mean, everyone over the last week or so, you've seen a lot of economists now scratch the recession call. And I think, keep an eye on those initial jobless claims. We saw this morning, they kind of popped up a little bit. If you start to see the economy weaken, maybe it is kind of delayed when everyone is basically throwing in the towel saying that the economy is still resilient. So again, it's just something to watch.
Is there a data point within the economy that we're not paying close enough attention to right now?
I think the inflation numbers are really important, and I just think keeping an eye on the weekly initial claims along with credit trends in the market. And the credit trends, as far as when you look at the bond market, spreads are pretty tight. Actually, in our view, somewhat complacent. Mm-hmm. But those are the things, as far as the real-time indicators, that we're keeping a close look at.
Yeah, and to your point, initial jobs claims this week, 248,000, or last week, I should say, 248,000, which was an increase from 227,000 the week before.